Here we go. Took a minute or two to get on here. Anyways, happy March 14th. It's almost springtime. Pretty exciting. Here in the Northeast, it's actually sunny and almost 60, so that's pretty exciting. So, all right, so I'll dive right in. So, most people think that the only way to borrow money is through banks or through private lenders. Those are typically the only real avenues. But what if I told you there's a smarter way and one that lets you borrow from yourself and keep all the interest? I used to rely solely on banks for loans and paying them thousands of dollars in interest over the years. But then I discovered a little known strategy and a little known vehicle that lets me borrow money without even stepping foot in a bank again. And after learning this method, I've been able to fund my investments, vehicles, pay off debt, and grow my and my family's wealth, all without depending on traditional lenders. So in this live stream, I'm breaking down the exact steps to borrowing money without banks. And by the end, you'll know how to use the strategy as well. So before we dive in, let me just know in the comments, if you could borrow money without a bank, what would you use it for? Business, debt, investments? Drop your answer below. Let me know. Always interested to see what people are looking to obtain cash for, capital. So my name is Michael Hession, and banks make money by keeping you in debt, in all honesty. They have a pretty sweet gig. They lend you money to charge you interest, take way more than what they ever give to you. And even if you have good credit, banks still control the terms. They can change the terms. And of course, they have collateral in case you default on the loan. So, what if you could be your own bank with no credit checks, no loan denials, no crazy interest payments to the bank, and what we call unstructured loans, where you control the terms, not the banks or the lender? So, let me show you how I took control and stopped relying on them. Now, to be clear, you can't it's hard to really completely cut out the banks because they are convenient, but you can do it to a large degree where most of your money is flowing elsewhere. So my secret borrowing trick is infinite banking, which you've probably heard me talk about before. And this term was coined by the late great Nelson Nash. And it's just utilizing a very particular type of participating whole life insurance contract to use as your own private banking system. So how I borrow money without a bank. So instead of borrowing from a bank, I borrow from my infinite banking policy or set of policies in my case. My own personal wealth system, my own personal private banking system. And that means I don't pay the bank interest. I pay myself interest and keeping my wealth growing by circulating that money within our own system, mine and my wife's system. So how it works. I put money into high cash value life insurance policy. It has to be set up the right way, with as much cash as possible and making sure that it keeps its tax advantages. That money grows tax free and earns a guaranteed interest net of taxes. So that's tax free, the growth inside of these things. And when I need funds, I take a policy loan, borrowed against my own money. You can take the cash directly out, but it's better to take policy loans out for a number of reasons. Partly because by not taking it directly out of the cash value, taking a direct withdrawal and taking a loan out from the life insurance company, collateralized by what's in my cash value, the money in the cash value continues to grow uninterrupted, in which over time becomes pretty extraordinary internal rate of return. So that's why we do loans instead of pulling money out of there. So what can you actually use the strategy for? Let me break it down. Smart ways to use the strategy, the right way to use policy loans. I talked about this on the last one, but it's really for anything. It's typically for larger purchases or paying off debt. That's one of the main things that a lot of my clients have done. They have high interest credit card debt or car loans or whatever the case might be. And it makes sense to use that cash to go ahead and take care of that debt and not just pay off the debt, but actually turn it into wealth, because then you start assuming the role of being the banker for yourself. Another thing is investing in business growth, scaling, buying assets, increasing revenue. Could be equipment repairs if you're a real estate investor and own multiple properties. Things always break down, and you can fund these repairs and equipment purchases through your own system of policies. buying cash flowing assets. A lot of infinite banking concept practitioners or utilizers are real estate investors, and they'll start their policies and grow their cash and access that cash for other investments, like real estate. And then I mentioned the paying off high interest credit card debt as well, which this is really important. I've thought about this before, how it starts to close the loop. We want to, most of us operate in an open-ended or an open, almost like a horseshoe economy, excuse me, where money comes in and it largely goes out, and whatever's left over we keep for ourselves, which in many cases is not very much. So by incorporating infinite banking, you start to create a closed loop economy where you can circulate the money back into your own system for your own benefit, like the banks do. So there's a wrong way to use policy loans, and I mentioned this on the last one, the last live stream last week, is borrowing just to spend it and not replenishing it. These loans that you take out from the life insurance company, they're unstructured. You don't actually have to pay them back, but if you do, it can start to impact the eventual growth inside the policy, and then you're not really acting like a bank for yourself. You're doing something different, and you can get in trouble if you just, if things get tight and you can't keep paying the premiums, you've taken out loans, and if it's too early in the process and the policy lapses, and you have outstanding loans that are greater than the amount of money of premium that you paid into it, in what's called the base premium, which is the principal. Think of that as a principal. It can become a taxable event if you let the policy lapse. So you want to be disciplined about how you utilize these policy loans. They're a brilliant piece of the equation, but you want to make sure you do it right and do it disciplined. So here's an example. I have a case of Alex, a gentleman named Alex, who made an extra $50,000 using the strategy. He needed $20,000 for new business equipment. Instead of going to the bank, he borrowed from his policy. The equipment that he bought helped him generate $50,000 in new revenue for the business. And instead of paying a bank, he paid himself back at interest, which goes back into his system. And now there's back another way to think about it. You're putting money back up on the shelf to be used for whatever the next thing you need is. Things are always coming up. Our need for finance is 100%. We finance everything one way or the other. We either borrow from lenders at interest and lose interest for the things we need, or we pay cash and thereby losing the ability to earn interest on those dollars. So this way we can remedy that by doing it this way. So the money works for you, not the banks in this case. And here's the most important part. How do you make sure you don't borrow too much? Actually, there's limits on how much you can borrow. It's based on what it's available in your cash value. So that's sort of, if you take out, say you have $100,000 available, you pull out 80 for something, that means you have 20,000 more available to borrow against until you replenish it, either through paying the loans back or future premiums, because these are whole life insurance contracts. Every year you're paying more premium or putting deposits into these policies for future use. Safe borrowing rule number 3, how to avoid risk and how to borrow the right way. The golden rule: never borrow more than your cash flow can handle. So this is also about, changing your habits. If you have certain habits that aren't really conducive to saving, this can be a really powerful exercise on how to be more disciplined. Because once you start to see how it benefits you, your family, your business, you want to be more on top of it. You want to be more disciplined and to do it correctly. These are some very basic types of, how you deal with money that no one ever teaches you when you're a kid. It just doesn't really happen for the most part. We're not taught money at all, really. You go through elementary school and high school, all these other things, math and reading and arithmetic and all this stuff. It's great. And this thing called money, we were never taught how to use it. So this is a way to actually learn how to do it and how to put it to work for yourself. Now that you know how to borrow money without the banks, let's take it to the next level. In my next video, I'm going to show you how I can help clients achieve financial freedom without stress, so you can take full control of your finances and build long-term wealth. And not just long-term wealth for you and your family, but eventually long-term wealth generationally, because you can start to think generations ahead, because these are life insurance policies. They have a big death benefit that is going to come at some point that comes tax free and can be feed into future generations and wealth building, kind of like the wealthy do, like the Roosevelt and the Rockefellers and all those folks. So before you go, tell me, please comment below and reach out to me. I'm my goal is to help as many people as possible understand, because it's about education first. I'll never try to sell you anything. It's about education. Starts to make sense and you want to implement it, then we can have a conversation on how to do that and what makes the most sense for you and your situation. Okay, thank you so much, and we'll see you next week. Have a great weekend. Bye.